Ladies and gentlemen, we have all of your Tesla stock breaking news. What's going on over this weekend? What the situation looks like for Tesla. Option activity on Friday, as well as option positioning going ahead. Options don't tend to be the end-all be-all for what's going to happen to a stock. If people are super bearish, buying a lot of puts, selling a lot of calls, it doesn't mean the stock necessarily is going to crater, or vice versa. If hedge funds, institutions, and retail investors are buying a lot of calls, it does not mean guaranteed the stock's going to go higher, but it does give you a pretty good indication of sentiment. And if people are putting their money on the line, well, that's something worth looking at. So we will look at that here in this video. Short position on Tesla, Google Trends data, all of it. And I will also share my thoughts on what to expect over the coming weeks and months. Do I think Tesla is going to go higher into year end, or do I think Tesla stock is going to go lower? And perhaps, since there's not really any huge breaking news today for Tesla, we should start with that. Do I think Tesla is going higher or lower? This is a bit of a mixed bag, so if you're super bullish or super bearish, you're not going to like this, because there's a bit of a bull case here and a bear case here. Obviously, in regards to the election, it's pretty simple. As long as there's not a sweep, and as long as you don't have a delayed election, contested election as some people call it, you're probably going to get a bullish response in markets. This is the big event that Wall Street has been looking forward to. There's a lot of put protection out there. You can see this represented in the VIX that's almost at 22. Like, this is a high VIX for the S&P being down about 3% from all-time highs. Typically, you don't get a 20 plus VIX until you're 5, 6, 7% down on the markets, unless there's obviously some kind of big catalyst, and this varies from period in time to period in time. But it's generally okay to say volatility is high today. After the election, some of that uncertainty is going to go away, and some unwinding of hedges will take place. That means perhaps hedge funds and institutions shorted Tesla, they shorted the Russell, they shorted the S&P, and maybe after the election, they start to cover on some of those short positions. So from a tactical perspective, as long as we don't have a delayed or contested election, and as long as we don't have a sweep, then I think there's a really good chance markets go higher. Now, if it starts to take a day or two even to know who the president will be and the makeup of Congress, that's going to stoke more fear in markets. Liquidity is going to dry up on the buy side, and you'll likely see more shorting activity, which there's not going to be a lot of buys to counteract that. That means markets could tactically fall. I guess there's a potential good and bad outcome from the election. Now, 2 days later, on Thursday, we are going to have the Fed meeting. The Fed's going to cut rates 25 basis points, and they are going to sound very bullish. Probably the most bullish that you have heard from the Fed in a long time, because they don't want to see treasury yields going up the way that they are, especially when we got a 12,000 print on jobs for last month, literally almost negative, and 10-year treasury yields went up 10 basis points. That is the opposite of what you would want to see happen if you are the Fed. If you are the Fed and the labor market is presumably like almost going negative, which only happens during recessions, you don't want the economy to be tightening at the same time. It really lowers the odds of a soft landing. So I think the Fed is going to be very bullish on Thursday, and that could add more fuel to this market to send things higher. Now, this next segment is on a case-by-case basis, but it's earnings. Big tech earnings, largely speaking, were okay. Apple was a little on the worst side. Microsoft was a little on the worst side. As far as the cloud segment, Azure slowing down. Same was kind of true for Meta, but that had to do with CapEx. All in all, I would say earnings themselves were actually pretty good. Not enough to give you huge upside in those big tech names besides Tesla. Tesla earnings by far have been the best blowout quarter that Tesla had, and that's what makes me a little bit more bullish on Tesla relative to the rest of the Mag 7, the other 6 stocks, if you will. But it's not really enough to tank the markets at this point. It's not really enough to drive those areas higher. So on a case-by-case basis, something like Tesla could be able to really outperform if the markets do see yields fall and uncertainty lift. I think that would be a big boost for Tesla. Now, intuitively, if I'm saying Tesla I'm bullish on, the rest of Mag 6, Mag 7, everything besides Tesla, I'm bearish on. That means if we get a rally in markets, I think it's going to be a broad-based one. I think you're going to get participation from the areas that have not participated, like small caps, like industrials, right? Like, mid caps. These areas are really going to outperform. Now, think about the Trump trade. Let's assume Trump wins as the markets have priced in. 10-year Treasury yields are going higher for really 2-3 reasons. Number one, Wall Street's expecting a stronger economy. Okay, that could be a lower corporate tax rate. For whatever reason, the markets are expecting a stronger economy. They're expecting inflation to be higher, which goes pretty much hand in hand with a stronger economy. And they're expecting the Fed is not going to be able to cut rates as much as we think, which they all kind of tie back together. Strong economy, presumably stronger economy for maybe longer, is great for small caps. It's great for markets in general. And I think it would be great for Tesla. And now from a technical perspective, on the S&P, you are sitting right about your 50-day moving average. Now, here's the deal. Anytime you've gotten to this 50-day moving average in the past, really over the past couple of years, you don't tend to stop selling at the 50-day moving average. You tend to break below the 50-day moving average and then find more support around the 100-day moving average. And if it gets really ugly, then you tend to find support at that 200-day moving average. So the 200-day moving average is almost perfectly lined up with a 10% correction. Technically, it's about 9.3% from top to bottom of a correction, and you're going to be at that 200-day moving average. I actually think a correction could be coming. I made that call. S&P's down 3% so far, but it really depends on the outcome of the election. I think it could go either way. We could know who the president is right away, or we could have a Bush-Gore situation again, and that would be a big problem for markets. I'm going to talk about this a little bit more in the next video, but Warren Buffett's Berkshire Hathaway now has a record $325 billion of cash on hand, and it is reported that they sold another $22 billion worth of their Apple stock in Q3, and they've now sold about 67% of their total stake in Apple. And I mean, this is one of those things where it could be just an Apple issue, or it could be an issue of broader market and economic activity. Now, why I'm not concerned about this is because Apple specifically has grown revenue 5% in the last 3 years. That's not like cumulatively, like 5% total in the last 3 years. It is a no growth stock, okay? Zero growth, no growth. Apple does not grow, but it's priced at 35 times this year's earnings. It's a very expensive company with no growth. Like Apple's PEG ratio is ridiculous. Okay, especially if you wanted to peg that to revenue growth, right? Not good. Okay, so from Buffett's perspective, I think it would make sense to sell Apple. Even if you're bullish on the rest of the markets, right? Even if you're bullish on the rest of the markets, you know, Apple's not really in a position to outperform. And if you're trying to outperform, there is zero reason right now why you should own Apple. The expectation is Apple Intelligence is going to cause a big refresh cycle for iPhone 16. You even had Bank of America that just came out on Friday that said that. But the fact of the matter is Apple Intelligence in this early stage sucks. People are not going to pay for it. People are not going to upgrade just for it. The iPhone 15 is just like the iPhone 16, just a little different. And you've gotten signs that Apple's scaling down their capacity to produce the iPhone 16. We're not going to get 5 to 10% iPhone growth over the next 12 months. It's just not going to happen. The 17 has a better chance, a way better chance. I actually believe the iPhone 17 might be a super cycle. I'm actually interested in getting the iPhone 16 or 17 but the 16 just is not super appealing. So from a apples to apples kind of, viewpoint or vantage point, it makes sense to sell Apple here. Out of any of the big tech names, the last one I would hold is Apple. I think you'd have to pay me to hold Apple at this point. Like, you'd have to give me like a fat dividend or something, because they're priced for growth they have not seen in years. And the iPhone 16 is not the product that's going to give them that growth. So do I think Warren Buffett is instinctively just super bearish on our markets? It's possible. I think he's more concerned about Apple's expectations in the near term. And again, Warren Buffett kind of missed the COVID bottom, right? That was one of Buffett's, biggest mistakes, was not buying enough during the COVID lows. I think Buffett wants to be ready for any potential turmoil that does come our way and take full advantage of that. And I think when you have a situation where Apple could take years to catch up to what the markets are pricing in as far as growth, it doesn't make sense to own Apple. So to me, is Buffett bearish on Apple? Yeah, for sure, at least in the near term. Is Buffett, concerned about the broader markets? I don't think we know that with certainty. I think there's other areas to be excited about in our markets, right? As long as we have a soft landing, which I don't know Buffett's exact stance on that, but as long as we have a soft landing, small caps, interest rate sensitive, basically pick any other 493 companies in the S&P, and I would probably rather buy any one of those than big tech at this point. And I shouldn't say that, because some companies in the S&P are not as great, but it's just from a value proposition. There's more to gain in the rest of the markets than there is to gain in big tech. You've already priced in the returns. Now, that's where Tesla really stands out, and I think Tesla could outperform in the coming months. If we do have the more Goldilocks bullish scenario, Tesla stock is going to go much higher from here. Tesla is going to be a $300+ company by likely midpoint 2025, as long as we have the soft landing, no wild contested election with court proceedings or any kind of, if you will, black swan event. Tesla's going dramatically higher in the near term. Once we get the election out of the way, once we get the Fed out of the way, which I think the Fed's going to be a bullish catalyst, I think we have a pretty good chance of moving higher, but I just don't know what's going to happen with the election itself, and that's where there's a little bit of hesitancy, in my personal opinion. I do think overall we are in a higher risk environment over the next 2 weeks, potentially longer than that. I think Wall Street really gave the jobs report a pass because of the hurricanes, because, the Boeing strike, but it was really bad no matter what you want to say about it. No matter if you factor in the Boeing jobs, no matter if you factor in, some workers getting laid off because of the hurricanes, it was just not a good report. That's the bottom line. Is the next month's report going to be bad? I don't know. Is the month after that going to be bad? How does December's jobs report look? Hell, how does first quarter 2025 jobs report look, right? So I really think we're in a higher risk environment over the next at least couple of months, really even the next 6 months. You're in a higher risk environment, but higher risk does come higher reward. If you do see markets sell off, that is something I'm personally looking to take advantage of, but you can only take advantage of that if you have capital on the sidelines ready to be put to work. And I think that's what Warren Buffett is doing. He's probably not saying, this market is guaranteed gonna fall. Like, he's probably not super bearish, but I think he would not acknowledge the risks out there as well. So these are just my opinions on Tesla and markets from here. I don't know with any degree of certainty what's going to happen. I would say it's 50-50 between, 10, 20% correction, depending on what happens here over the next, couple of weeks or couple of months. I would also say there's a good chance that things go just fine and you get 5 to 10% upside in the next 3 to 6 months. I think a year from now, if we do have a soft landing, you're going to have 20% upside from here in the S&P. But again, we won't know if we're going to have a soft landing until probably midpoint of 2025. Let me know your thoughts on that down below in the comment section. But getting into Tesla a little bit here, you have short interest off free flow at 2.84%, $19.81 billion currently sold short in Tesla stock, totaling 79.3 million shares. You do have return shares of 1.16 million on Friday, borrowed shares 654,500, and that actually means you had covered shares of 507,000 on Friday. So actually looking at shorts covering on Friday, which, I mean, the stock was only up a half 1%. So you may not think that's what was happening. But in fact, shorts are trying to de-risk themselves from Tesla stocks upside potential here. Now, option activity looks pretty similar, actually coming in with a very good number for Friday. You had 226 different trades totaling $178.13 million with a positive order value of 65%. As far as option activity for Tesla stock, I really want to take a look at November 8th expiration, because that is next Friday, and we're going to have the election out the way. We're going to have the Fed out the way as well, and it's really hard to tell, you know, what's going on here just because there's so much. But when you really boil this down, there's a lot of calls on Tesla around that 250 strike, which is right at about where Tesla stock is right now. You also have quite a bit of puts at the 250 as well. You have 9,400 in open interest for the 250 put, and about 30,000 for the open interest on the call side for the 250 put. And it's pretty similar numbers across the board. For the put side here, you have 2,000 at the 250 put, and you have about 2,400 for open interest for the 250 call. You could definitely see these big green circles here. That shows you a lot of positioning. On the call side at the 260 call, you have almost 41,000 for open interest. That's a lot. Okay, there's a lot of people betting on upside for Tesla here. 275 call has 41,000 in open interest, and these are not dead options. Like, there was 25,000 contracts traded on Friday alone for the 260 call. There was almost 10,000 traded for the 275 call on Friday. The 280 call has 16,000 for volume on Friday, with 18,400 for open interest. So there is definitely some active positioning to the call side, and you are well skewed to the call side overall. Open interest is almost 61% calls and 39% puts. So almost 2 times as many calls for this Friday than puts. Sentiment for Tesla stock today is bearish at 42. Yesterday it was neutral at 50. Message volume today is normal at 47. Yesterday was normal at 48. And the participation ratio is normal at 54. Google Trends data does show some declining overall search trends for Tesla. Cybertruck dropping to 37, Model Y to 36, Model 3 to 31, Model S to 13, and the Model X sitting at 9. Let me know your thoughts on this upcoming week down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.